Hello investors, welcome to the channel where I use technical analysis to find possible swing trades. Today we're taking a look at one of the most iconic companies in the world, Coca-Cola, ticker symbol KO. This is a large cap company with a market cap of $238 billion. It's known all around the world and needs a little introduction. And here we are on Coke's annual chart, and you will see right here at the end, a huge red candlestick that posted yesterday, dropping the share price down to $52.38 at closing. And this is the result of rating agencies re-rating the projected share price of Coke lower. Now, it's certainly not as low as the share price is now, but that certainly has an effect, and you can see it right there. Now, we will be curious to know if the share price will continue to fall over the next few days, offering an even better time to buy, but I will definitely be adding this more shares to my portfolio. And if we look here, the RSI, as expected, is oversold and falling. The stochastics are oversold and falling. The volume chart shows over the last several weeks, you can see there's more red than green. And of course, there's a giant red candlestick yesterday, not as big as the one a couple of weeks ago, but still this is quite significant. And I imagine the balance in this candlestick between buying and selling is drastically disproportionate. And of course, the MACD is still falling. It looks like it fell off a cliff at the last candlestick there. So we definitely have not formed a trough yet, or at least not one that is clear. And it does look like it may continue to fall. Now, if we switch over to Coke's fundamentals here, you'll see this is an excellent business all around. Short interest, less than 1%. Institutional ownership, almost 70%. And a good chunk of that, as we know, is Warren Buffett. You can invest with the best if you choose to purchase shares here. The debt to equity ratio shows that it does have more debt than other companies in the non-alcoholic beverages industry. There's more debt than 78% of its peers. The PE ratio is high. Of course, Coke always commands a premium because of its stability. PE currently is 22.75, which, as you might suspect, is lower than it usually is. The gross margin of 58% is higher than 93% of other companies in their industry, and the operating margin, just over 26%, is outstanding for the industry. It beats out 97% of its peers. I'll point out this net profit margin down here is almost 24%, which is also outstanding. And we look at the return on equity here, almost 43%. Again, outstanding. It beats out 89% of other companies. The growth rate is average for the industry, and the dividend yield here is excellent. 3.34% dividend yield, and the payout ratio is 74%. Now, that's a higher payout ratio than I would like to see, but given Coca-Cola's track record and history, I am certainly comfortable accepting that. Now, one last thing I will point out is that this same chart pattern happened to Pepsi yesterday, as both companies were re-rated a bit lower than they were. So you can also take a look at Pepsi and you'll see exactly the same thing. I chose to go with Coke today because its fundamental metrics are slightly better. But Pepsi is an outstanding company and one that you may also want to look at. But remember, none of this is financial advice. I'm not a financial advisor. I make these videos for education, information, and discussion. If you get something out of them, I would appreciate it if you hit the like button and subscribe to help out the channel. If you enjoy this kind of content, please hit the bell notification to be alerted when new videos post. And let me know what you think of Coke and or Pepsi down in the comments. That's all for today. Thanks for watching, and good luck with all your investments.